Hi there, welcome to Kneppy Invest. Time for another weekly technical and portfolio update. We'll look at the performance of three of my portfolios. I did make two purchases during the week. One of those purchases was put into my long-term portfolio, or maybe I should actually call these by different names. Long-term, maybe quality, medium-term, short cap, and short-term should be just technical. Maybe I shall do that. Anyway, I put one of those companies, technology one, into my long-term portfolio, and the other company, Fenix, into my medium-term portfolio, simply because iron ore prices have been going up, and most of the money in iron ore has been going into those bigger companies. Fortescue is at almost all-time highs. Rio, BHP, while even Mount Gibson share price has been going up, while Fenix was languishing. And I thought there was a bit of disconnect between what we're seeing in those big cap iron ore players versus Fenix. And it was just extraordinary timing because I bought on open on Monday and the share price has already increased about 10%. And then in the technical part of the video, we'll be, of course, looking at the indices, commodities, Bitcoin, which is looking pretty nice right now, bonds as well. We'll also have a look at some individual companies on the ASX, and the theme today will be focusing on companies whose price is at a 12-month high, 6-month high, 12-month low, and a 6-month low. But first, let's have a look at my portfolios and the performance over the past week and the performance since July the 1st. First of all, we look at the long-term portfolio, and the theme of this portfolio is quality. I'm looking for high-quality companies that I want to own for the long term. This is the traditional approach that most experts say individual investors or retail investors should have. Just find those high-quality companies and hold them as long as possible. And I'm always comparing my performance or the performance of my portfolios to the benchmark. And the benchmark for the long term is the STW, because if I can't bet, maybe the benchmark should be Qual, which is an ETF. But my benchmark that I've chosen for this particular portfolio is the STW, which is an ASX 200 fund. This includes dividends, and comparing it to the performance of this portfolio to the benchmark, and it's beating it. 2.74% compared to the benchmark, which is up 0.2%. And when you look at the capital gain, long-term up 1.5%, the benchmark down almost 2%. So some nice dividends coming in. Also, I have a currency gain for my long-term portfolio because I do invest in international, well, not international companies, but companies that are listed on international exchanges. And the currency gain over the past few weeks has gone down a fair bit. So there must be some strength in the Australian dollar over the past few weeks. I don't really follow the dollar all that much, but just by looking at that, the Australian dollar has gone up. So my currency gain has gone down a fair bit. But overall, I'm quite happy with the performance of this portfolio. Some really good companies, really high quality companies, I believe, in this portfolio. And the best performing companies right now is Pro Medicus. And most people would say, when you look at Pro Medicus, that company is overvalued. P/E ratio of well over $100, or not $100, well over 100. And I decided when I bought some Pro Medicus that because I want to own the company, even though I thought it was high quality, I'll just buy a small allotment of shares, and then if the share price dives, then I can add to my position. And that is the philosophy I'm using recently. Is even if I think a company is overvalued, I'll take I'll purchase a small amount of shares. If the share price pull back, I'll add to my allotment or my holding. And I did that with Technology One this particular week. Second best performing company is Breville. And then we have Nick Scali, Goodman Group, and JB Hi-Fi. And the worst performing companies: Zero, Telex Pharmaceuticals, WiseTech, Mineral Resources, and ResMed. Internationally, best performing companies. Actually, I should do a percentage. Let's look at the percentage. Not much change here, although when you look at percentage, Nick Scali comes in second instead of Breville, and then we also have PWR Holdings coming in at number 5. Worst performing companies: WiseTech, Telex, Zero, ResMed, Mineral Resources. And internationally, My best performing company is Adobe. We also have pretty good performances from Alphabet, Amazon, Microsoft, and Shopify. I have not even thought about selling any of my companies in my international holdings. A few companies in my Australian holdings I have considered selling, and I have considered moving some of these companies into my other portfolio because I don't necessarily consider those companies to be high quality. For instance, Clearvue has a potential, Nanosonics has a potential, Telex Pharmaceuticals has a potential. But when I think of those companies, I just want to hold those companies for a long time because I think they could be behemoths on the ASX in a decade or so. So happy with the performance of this portfolio, but it doesn't really compare to the performance of my other two portfolios. Now onto my medium term, which is a small cap portfolio. This is sort of my favorite, sort of equal favorite investing style, finding small cap companies that can grow into big cap companies in the future or high quality companies in the future. And I have a lot of holdings in this. And that's my style of investing, is buy or find companies that I think can grow, but I don't have absolute conviction that they can grow in the future because there's still a lot of uncertainty and we are talking about the future. And my philosophy is to, even if I think it's a low chance, take a position in that company. And this philosophy has worked wonders in the past and is working wonders right now. Because when we compare the performance of this particular portfolio to the benchmark, which is the ASX Small Ords, which is down 4%, this portfolio is up 10.2%. And it has been gaining steam over the last few weeks. In fact, the XSO went down last week. This particular portfolio went up. Best performing companies in this particular portfolio include Findi, up almost 200%. Then we have Energy One, Doug, Email Payments, and then Audinate. A few of these companies, particular, I'm looking at you, Audinate, potentially, and I think it's a fairly high chance, Audinate will eventually become a high quality company, and I will put that company into my long-term portfolio. We also have Atlas Pearls, Vysarn, which has done splendidly during the week. In fact, I think I might have included Vysarn in my technical update, and Serata, Stealth Global, Play Studios. Worst performing companies, Pointera. I still have hope in that company, Ventura, Vection Technologies, XREF, and Rectify Technologies. You'll also notice the value of some of those worst performing companies is fairly low. And then you look at it compared to some of the best performing companies, those values of those companies is fairly high. And that's the whole point of this sort of strategy, is you hold on to those winners and the value of those winners goes up and up and up and up, and you hope they keep on going up. And the worst performing companies, the value of those companies are pretty weak, and you just continue holding them because you just don't know. So that's my philosophy moving forward, is just to maintain holdings on the big best performing companies. And the question becomes, when do I sell? And that is a big question. I've asked this question in regards to a few companies here. The main ones are Stealth Global, because they won a really good run recently, and I thought, should I take profits? And there is another company, Duratech is another one. And the other one was IPD Group. Even though it's down here at 0.87%, I've been holding that company for a few years now, and it is a multi-bagger for me, and I've been wondering, should I take profits? But every single time I look at it and I go, I still think that company could be significantly bigger in 5 to 10 years. So I'm going to maintain a holding that company for the time being. So very happy with this. And the good thing about this portfolio, it's catching up to the third portfolio. My third portfolio, which is a technical, using a technical strategy, the short-term portfolio has been significantly outperforming the other two portfolios, but the medium-term portfolio or the small cap portfolio is catching up. Now, this says 5.7%, but this is only looking at open positions. If I also include those positions where I've taken profits or losses, this particular portfolio is up 11.7%. So I'm happy with the performance of this portfolio because this is using a technical strategy. Looking at charts, that's all I'm looking at when I'm deciding to buy or sell companies in this portfolio. And some of my holdings in this portfolio could be only held for short term. For instance, Australian Ethical, Baby Bunting, Bravura, City Chic, all held for short terms. And I'm just going to go back to only looking at open positions. Still up 5.7%. But the best performing company right now is Step One. And I don't think I will be including Step One in my technical analysis. So let's have a look at Step One right now. I don't know when to take profits for this one. And the main reason is because when you look at the chart, it is quite volatile. And the trend is still up. So a few days ago, maybe a few weeks ago, we saw the share price Wednesday, the 15th of November. Share price just fell 14%. Not high volume, not extreme fall, fairly low volume. And I thought, oh, is that the time to sell? But the share price has zoomed higher and is back up to almost the long-term high, which is about 88 cents, back up to 84 cents. And we did see the share price rally at the start of the week, up 4% on the Tuesday, and then up another 7% or 8% on the Wednesday. So I'm not willing to take profits just yet. This company has also gave me a really high dividend. So the dividend yield is at 6%. But since I bought at much lower prices, the dividend yield I got was about 13% or something ridiculous like that. So I'm not willing to sell Step One just yet. Market 156 million, but maybe it is getting a little bit too much froth in the company right now. But anyway, so I might take profits in Step One eventually. I just don't know just yet. And one of the rules I'm going to implement is not hold any companies that have a loss of 10%, which means I probably should be selling ResMed or Nere Research. But again, I think both those companies are really good value. So possibly I will put those holdings, although I also hold those companies in my other portfolio, the short-term portfolio, not the short-term, the medium-term portfolio. So I might transition my trading positions in these companies into those portfolios because I don't want to sell those companies because I still think they are really cheap right now. Okay, so that's it for the performance of my portfolio. Very happy with the performance over the past, well, since the start of financial year. Can't complain. Now onto the technical part of this video, starting with the indices. And to be honest with you, nothing much to talk about. When we're looking at the Australian indices, the XGO over the last week was down about 0.12%. So nothing much happening. Still going sideways. We have seen some short-term positive sentiment, some short-term negative sentiment. So recently we have seen a little bit of positivity come into the Australian markets, but that's just short-term. Some experts talking about a Santa rally. If a Santa rally is going to happen this year, who knows? No one really knows. But really the XJO is just going sideways right now. Unlike the XSO, which you would say we have seen a nice little rally, but it's after a bit of a longer term, I won't say longer term, only about a two-month downtrend. So this could be just a little bit of bounce because of that longer term downtrend. So I would still say the small orders is in a downtrend right now, and it's moved into a resistance area. So no change in sentiment, change in trend when it comes to small orders. Now onto the American indices. First of all is the NASDAQ, the NDQ. This has moved to a 2-year high. Nice rally in the NASDAQ. This is the market to be in, which is one of the reasons why I was buying some of those big tech companies I started buying NASDAQ companies down here at the end of 2022 and start of 2023. When the downtrend had come to an end, that's when I started buying. And I would not be hesitant buying some of those companies right now. Question is whether they're overvalued, but I'd say if they can continue to grow from here, they're not overvalued. And most of those bigger cap companies are leading the NASDAQ, are leading the American market higher. Because when you look at the Russell 2000, for those who don't know, Russell 2000 is the smallest 2,000 companies in the Russell 3000. And the Russell 3000 is like the 3,000 companies in America. So it includes the New York Stock Exchange and the NASDAQ. And this is the small cap, sort of like a proxy for the small cap. And this is fairly similar to the XJO or even the XSO. The trend is down for the small caps in America. So it's only the larger caps really leading the charge right now. And even the Dow Jones, which is, this is a nice little run for the Dow Jones. But even this is sort of more like the XJO, but not as bearish. This is a little bit more bullish. If the Dow Jones can get above 35,600, which was the last highs we saw back in August. that will be actually a fairly bullish move for the Dow Jones. That's all I'm going to look at when regards to indices. Now on to commodities. First one is iron ore, because iron ore went through the last highs. So the last highs we saw were back in March this year, and iron ore has gone above that. So iron ore looks pretty good. That's one of the reasons why I took a position in Fenix, because of iron ore prices. And I maintained a position in Mount Gibson, and Mount Gibson is up quite a bit from when I last looked. So iron ore looks pretty good. You know what else looks pretty good? Gold actually looks pretty good right now. It looked pretty bad back in October, start of October. It looks really ugly there. Nice little run, nice little pullback, back to a nice area of support, and it's going on a run again. If it gets above 2010, that would be a nice move, a bullish move. And then the next bullish move would be getting above 2060, which is a long-term resistance area for gold. Just look at the long-term, just look at the weekly chart. Gold has had problems getting above 2060 1, 2, 3 times. Technical analysis does work. And as soon as gold gets up to 2060, what's going to happen? A lot of the short-term traders in gold will sell because it is a resistance area for the commodity. And if it gets above 2060, say if it gets to 2100, those who would be selling would be going, this could be a potential breakout, and they're more willing to buy. That's how technical analysis works. That's why, well, that's how it works. That's why it does work, because of traders looking at full technical signals. And gold is a perfect example. And if gold falls to, say, 1,620, which is the lows we saw in October 2022, you will see some buying coming in. Anyway, so a little bit bullish when it comes to gold. Uranium, well, can you get any more bullish? It keeps going up, above $80 right now. I did hear someone say it's priced as though uranium's at $100 right now. And that makes sense, because there's a lot of excitement in this area. And when there is excitement in the area, it's priced as though the price of the commodity is higher than it is. And at this point in time, I'm not holding any uranium. And I don't know. I think it's ripe for a little bit of a pullback, but I have been saying that for a while now. US oil, unlike some of the other ones here, not quite as bullish. This one is bearish, in fact. It was looking bullish for a while, and then that bullishness stopped in September, late September, got to $94 a barrel. Now it's 75. And I have been thinking about buying some oil companies, but Karoon, simply because they did a cover raising, share price fell a fair bit. I sort of like the acquisition they made, but based off this particular chart, I would not be buying any oil companies right now. If the price gets to $60, maybe not $60, about 65, I could be thinking about it. Bitcoin does look fairly interesting. This looks nice. Keeps going higher. This is an uptrend. This is a very definition of uptrend. I don't check my Bitcoin holdings at this point in time, but it would be up probably about 33% or so, almost 40%. Yeah, there's nothing to complain when it comes to Bitcoin. This is moving up. Actually, let's have a look at the weekly charts. Just to see if the weekly chart says anything different. You can see the excitement of Bitcoin back in late 2020, 2021. And even when you look at the weekly chart for Bitcoin, last time it was this high was back in May 2022. So we are talking about 18-month high when it comes to Bitcoin. So this is looking bullish. Bitcoin's looking bullish. Lithium, maybe I should have left Bitcoin to last, because now back to commodities. Lithium, still looking ugly. I'm still waiting for a shift in sentiment when it comes to lithium prices, but it keeps falling. And one of the first companies I'm going to show you is a lithium company I am thinking of buying. And one of the main reasons I'm thinking of buying is because it is the most shorted stock on the ASX. And when it unravels, or when they cover their shorts, I wouldn't be surprised to see the price of that company just rocket higher. And it's at a really interesting support level, which means potentially those shorters will cover their positions. Is that the right word, terminology? Anyway, copper starting to look more interesting. So it did bounce off a nice little support level, and it bounced off that level in October, so about a month ago, and it's gone higher. So not really following many copper plays on the ASX. So we have Aries Resources, Sandfire. I do hold Hillgrove, but that's going to production, I believe, in the next year. I did hear someone say, if you want to play copper, just buy BHP, but I do prefer pure plays because BHP is an iron ore play, in my opinion. It is a very small copper play, and BHP share price will move with iron ore prices, not really copper prices. But also uranium is an interesting play when it comes to, well, BHP is an interesting when it comes to uranium play as well. Coal show, look at coal. Coal's not doing much at all, still moving down. And we'll look at, that's it for, yeah, that's it for commodities. I thought there was another one. And now onto bonds. So 30-year American bond was had pulled back a bit. Everyone was getting excited. That's the end for the bond yields. That's a 5.1% is the high we're going to see. Interest rates are falling, that sort of thing. This could just be a little bit of a correction. That's it. So the way to play this, in my opinion, is the TLT ETF, because again, bond yields and bond prices are inversely related. So the TLT has been in downtrend for a while, and we have seen a little bit of a bounce. So if you just look at this, you'd say, well, this is just a bounce, just like we saw back in November last year. So there was a nice little bounce in November last year, and then that bounce, didn't turn into an uptrend, went sideways for a while, and then moved down again. This might happen again, just don't know. If you just look at the charts, this is telling me not quite yet for the TLT. That's the way I'm going to play when it comes to bonds, is the TLT. And of course, the Australian 10-year should mirror the 30-year American, sort of. And that's just a little bit of a correction, a little bit of a pullback. That's it. So that's all I've got when it comes to commodities, Bitcoin, and the bonds. Now onto individual companies. Let's have a look at the companies I bought, Fenix and Technology One, and then we'll look at companies I either don't own or 6-month highs, 12-month highs, 12-month lows, 6-month lows. But first, Fenix. So I bought Fenix on open on Monday. So typically I don't buy on open, but I just went, I'm going to buy this on open. 24 cents was my buying price. And for some reason, the share price rallied on that day. This was just fluke timing by me. 8.5% that day, another 4% the next day. And the main reason I bought Fenix is when you compare to, say, Fortescue, most people, because of the iron ore prices are going higher, have been buying Fortescue. Probably less Rio, but I wouldn't be surprised. I haven't looked at Rio yet. Wouldn't be surprised if Rio's share price is, pretty high. It's equaling, got to the last highs we saw back in January. And even BHP share price should be rallying here. Yeah, not as much. So not as much as Fortescue. So it seems like most of the Fortescue play is, or most of the iron ore play is in Fortescue right now. And that's one of the main reasons I went to the Fenix, because even though iron ore prices had been on a nice little rise recently, we didn't see much of a rise in Fenix until recently. So the share price had only gone from 21 cents to 24 cents. So there's much more of possibility of the share price rising from here. And the more I look at Fenix, the more it is a potential nice medium to long-term play. Fenix are doing some really interesting things recently. And then Technology One, the complete opposite of Fenix. The share price has gone down. But again, I took a small position in this company, and if the share price pulls back a significant amount, that's when I'll add to my position. So now I've got my position, and now I'm looking to add to my position in these high quality companies. So for instance, if Technology One falls to say $11, I would gladly add to my position. Will it fall to that level? I have no idea. That's the reason I've done it, because I have no idea what the share price is in store for this company. If we do go through a major correction in the markets, I will add to this position. And that is another reason why I've taken positions or small positions in these high quality companies, is when you do own shares in a company, you're more likely to pay attention to the performance of those companies. And that's true for myself. And I have heard that is true for most people. And I have heard some investors, more professional investors, actually do that. When they want to they want to follow a company a little bit more closely, they'll just buy a small amount of shares in that company, and then they just follow that company a little more closely. Anyway, so I'm now a Technology One shareholder. Share price has been an uptrend. Their results were pretty good as well. So no complaints there when it comes to that company. I have been thinking about buying Pilbara just because of a technical play. So the share price had reached a nice little support zone between about $3.40 and $3.60. So currently $3.64. And the way I'd play this is I'd take a position in this company, particularly if it gets to about $3.40. Take a position. If the share price falls significantly below $3.40, just sell, because that would be sort of a really bearish move. But hoping if the share price gets to $3.40, that you will see some of those shorters covering their position, and that could see a rapid rise in share price over a short period of time, because this is, last time we looked, this is the most shortest company on the ASX. Now, funny enough, a lot of these lithium companies, when you compare the price of the company to the lithium prices, there is a bit of a disconnect. So there's still a lot of interest in lithium right now, and there is a bit of that disconnection between lithium prices and that interest in lithium. And I think that interest in lithium is just the longer term view. Not sure why lithium prices are falling. And typically when a price of a commodity rises or drops, it's usually because of a disconnection between, I've used that word like this video, disconnection between supply and demand. Is there too much supply on the market of lithium, or is there too much lithium supply on the market right now? That could be a reason why lithium prices are falling. Bigtincan. This was interesting. The share price just absolutely collapsed over the past 2 weeks. The share price more than halved, and you can see massive volume coming in. And I was waiting for a bounce. This would have been completely oversold. And when a company shares are completely oversold, like Bigtincan, there is a time to think about taking a very short-term position just for that bounce. And then the share price bounced on Friday. Share price rallied 24%. The problem is you just don't know when the bounce is going to happen. I was thinking the bounce might happen around 16 cents, and the bounce happened at about 14 cents. So really interesting to watch these sort of bounces. But more than likely, based off what we've seen in the past, this could be just a short-term bounce. Wouldn't necessarily say dead cat bounce, but potentially the bottom has been reached because of large amount of volume coming in the last 4 days, not including the bounce day. And that is potentially showing us that there is capitulation. Investors just can't handle it anymore. They saw the share price dropping like a rock, and they just couldn't handle it, and they sold en masse. And that way you've seen massive volume, or some institution just selling on market, and that led to pressure on Bigtincan prices. I have a very small position in this company, but it's a very small position. My nose is really itchy. Tabcorp. Typically, I'm not that interested in this company. And when we look at the weekly chart, you might be able to see why I might be a little bit more interested in Tabcorp. So if we go all the way back to 2014, whenever the share price gets to, say, in fact, we can actually lower that a little bit. When the share price gets to around about, and this is weird because Tabcorp did, what's a word? Spun out. Tabcorp spun out the Lottery Corp, or what that company is called. So back in 2014, 15, and 16, the share price was not that low, but because they spun out, the share price actually was affected by it. But this chart is just looking as if the company did not spin out Lottery Corp. This is what the share price would have looked back 6, 7, 8 years ago. And at about 75 cents, or just around, or between 72.5 cents and 75 cents, is a really good, interesting, maybe strong support level for this company. Because whenever the share price has reached this level, apart from COVID-19, and that's a different story, but when the share price reached this level, we have seen some support. Now, the share price has taken a massive hit over the past few months. It reached a high of $1.16 on the 2nd of June and has fallen to 74 cents. So something negative has been going on with this company. I don't follow Tabcorp all that closely, but the only reason I put it onto this video is just because the share price right now is at a good, strong support level, or interesting support level. No, I'm trying to think of the good word. Significant support level might be the best word. Significant. Not sure strong is the best word. Significant support level. And the market knows it. The market knows it. Okay, now onto some companies whose share price are in uptrends. First one is Tuas, which is a Singapore, I believe this is a Singapore telecommunications company. Engages a mobile network and provision of mobile telecommunication services. It operates through Singapore and other segments. I don't believe this company is profitable yet. $1.1 billion. Doesn't say it's profitable just yet. A lot of interest in this company, though. Look at the chart. Nice looking chart. The share price moved into uptrend in April at around about $1.45, and the share price now $2.34. And the share price has moved above a nice little resistance zone, a significant resistance zone, and that moved above that on the 10th of November. So 2 weeks ago, and the share price has rallied. So, yeah, potential nice play here. Share price has now moved to an all-time high for Tuas. I think one of the reasons why people are interested in this company is just the management, because I'm pretty sure David Teo, who used to be the TPG CEO, I think maybe even the founder of that company, is now with Tuas. I could be completely mistaken, but I believe that might be true. A company I know nothing about, Clearvue Technologies. There's another company called Clearvue, something or other, CVW. Clearvue Wealth. This is Clearvue Technologies. View spelled differently, V-U-E. Don't know anything about this company. Market cap is 119 million. I don't think this company has any revenue, scant revenue. But look at the chart. Something has got the market excited, and I don't know why. And I know a few chartists who will just look at a chart and buy a company or sell a company just based off the chart. And when you ask them what the company does, they go, well, I have no idea. I just buy and sell based off the chart. And this could be an example. Maybe they were buying this company back in July when the share price broke out at 24 cents. And now the share price is 52 cents. Yeah, who knows what this company does, but just look at the chart. Market is excited. And we have seen increased volume as well. So if you go back, this particular chart goes back to September last year. Very little volume from September all the way through to May this year. And all of a sudden, volume is starting to increase. So someone is interested, and more than likely it is fund managers, and they're probably a healthcare company, I would assume, engages in the provision of photovoltaic and nano technology to produce clear glass that generates electricity. Well, that sounds interesting. I should do some research on this company because the chart looks interesting. That description looks interesting via TradingView. Codan, a company I've owned, share price is just creeping higher. This is the very definition of a chart creeping higher. I like charts like this because there's no traders in this right now because share price is just going up so slowly, little volatility, and traders don't like the lack of volatility. They love volatility. So this is a perfect example of a share price just grinding higher, slowly grinding higher. And the share price recently got to, at $8.40, share price is at a 1-year high. So this is one of my, I think Clearvue was another one where the share price, actually all these, Tuas, Clearvue, Codan, and some of the other companies I'll be showing you are at least a 1-year high. And Codan now is at a 1-year high. Go Codan. Another company that's a 1-year high is Veem, and I'm really not buying this company. Share price hit a really significant support level at 38 cents back in July. I was following this company at this point, but the share price was in a downtrend, and the share price took off, but I thought, yeah, it could be just a bounce. But look at that chart. The market has become interested in this company in the last few weeks. From the 10th of November, the share price of this company has gone from 56 cents to 90 cents. And on Friday, the share price of this company rose 15%. And the share price for Veem is now at an 18-month high. I've done a video on this company. It was 2 small cap companies to buy. So look out for that video on that company. I forget what other company I did feature, and maybe LaserBot or something like that. But Veem is definitely a small cap company to keep your eye on. Maybe not now because the share price has rallied. But this company is profitable. It's growing, profitable. No complaints with this company. I'm just not a shareholder. So I'm complaining the share price has rallied when I'm not a shareholder. Veem is sort of an example of a company I probably should have owned because it is a small cap company, profitable, growing, interesting space, that sort of thing. Now on to gold hydrogen, GHY. No idea what this company does. I'd say something to do with hydrogen. Maybe not gold. Natural hydrogen exploration development company. Not many of those companies around, but this is playing the alternative energy thematic. And for some reason, share price has rallied hard. Since the 1st of November, share price increased 51.7% on that day after the share price was in decline, and the market loved it. Massive volume coming in as well. But the share price did decrease 20% on Friday. So nice little pullback. So possible with this pullback, possible buy if you think the share price will continue to rally from here. A company I don't follow. Now to a company I do own, and this is Vysarn. I don't know why the share price has rallied the last 2 weeks, but the share price has. This is another example of a beautiful chart. And I bought just because of the chart. And then I looked at the company and went, well, this is actually a good company. So this is an example of a company where I just bought because of the chart. So you might think this belongs in my technical part of the video, but I put this company into my medium or short or small cap portfolio because I like what the company does and I also like the chart. And for some reason, the share price has rallied up to 25.5 cents. So I'm loving the rally. Now on to companies where the share price is at long-term lows. So we're talking about 6-month or year low. 5 more companies to go. The first one is I'm starting to do a little bit of research on this company because potentially there's some value with Alumina and the share price is right at a really significant level. So the share price for this company is at a multi-year low. In fact, we could look at the weekly chart. Last time share price was this low for Alumina. We're talking about multi-year low. And we have to go all the way back to 2012. We're talking about a 10-year low for Alumina. That's why. And that low was back in 2012. So Alumina is, so it goes from bauxite to alumina to aluminium. So you smelt alumina into aluminium. Now I'm going to start my research on this company. Why has the share price collapsed? Is there any value in this company? The main reason I'm thinking that is because I did hear this company mentioned in a podcast, and podcast gives you ideas, and this particular podcast gave me idea to do some more research on alumina, and I will do that because where the share price is right now and potential value. Now, whether I see any value in this company depends on that research. Another company whose share price has been hit hard is Star Entertainment Group. This is another company that is at an all-time low, not a 10-year low, all-time low. So not only a 6-month high low, 12-month low, all-time low for Star Entertainment Group. I have heard some people taking a position in this company because share price is at a really, significant low, but share price just keeps on falling. We don't know where the low is going to be from here. And how do you figure out whether this company is good value right now? I just don't know with Star Entertainment Group. But eventually, if the company can turn things around, eventually there might be some value in this company. The question is, can the company turn things around? Who knows? I don't know. I'm just going to wait for Star Entertainment Group. Another company, and this I'm pretty sure 29 Metals is a copper play. I'm not sure if it's a pure copper play, but their Capricorn mine near Mount Isa was affected by flooding last year. I'm not sure if it's back into production, but the share price of this company keeps falling lower. Another company I'm watching closely because if any sort of positive news comes in for this company, just like Star Entertainment Group, just like Alumina, you might see the share price rally quite quickly. But the share price at 51 cents, and this would be another company that is at an all-time low. Now, this company hasn't been listed long, since June 2021, but look at that share price dropping. And I would say that there is potential the share price could get back up to the highs we saw back in 2022. I'm not saying it will, but there is potential. And that's one of the reasons I am following this company. Company in production, and the price of copper has been rallying. And Michael Hill Jewelers, a company I have traded in the past. And I'll just show you when I traded this. It's pretty obvious. When I traded this, look at that. We go back to 2021. Share price of this company was in a beautiful uptrend. So I traded that. This was not a long-term hold for me. And then I took profits, probably a little bit early. I forget exactly when, but I took profits. I don't think the share price, I took profits when the share price had doubled, if I remember correctly. And now the share price is in a downtrend. So some of these companies you just trade the uptrend and just wait. And the price of this is at a 12-month low. In fact, the share price of Michael Hill Jewelers is at a 2-year low. So we're talking about 2-year low for this company. I could consider myself thinking about, I haven't furthered my research in this company, haven't looked at their results yet. I could see myself taking another position in this company just because of value. It says price earnings ratio 9, dividend yield 9.3. So the market is expecting a significant drop in profit and dividends for this company. Whether that's going to happen, I don't know, but the market is pretty convinced of that right now because the share price is in a downtrend and keeps on falling. So I'll probably do a little bit of research on Michael Hill Jewelers, or just wait for the share price to move into an uptrend like it did back in 2021. And finally, Woolworths. Now, I would not even think about buying this company right now, even though the share price has fallen a fair bit from $40 or just above $40 to $34.50. Simply because this company is still way overvalued. This company won't grow much in the future. It will grow maybe 2 or 3% per year. That's it. It should grow at the rate of population growth. This is a fully mature business. I don't know why people are buying this company at a PE ratio of 26.3. When you see a company with a PE ratio of 26.3, you're talking about growth and significant growth at this. Woolworths does not have, or will not have, significant growth. I think people have been buying Woolworths just because it's a defensive company. I don't buy companies just because they're defensive. The time to buy this company was way back in 2016 when the share price was $16. Half of what it is now. When the PE ratio of this company is like 10 to 13, that's when you buy the company, not when it's PE ratio of 26.3. Even a dividend yield of 3%, you could get better returns on just putting your money in the bank. Anyway, no interest in Woolworths, and maybe the market is moving in my direction because the share price is in a downtrend and the share price is now at a 6-month low. In fact, the share price is now at a 10-month low, and I still think there's more for it to fall from here. Anyway, you could disagree with me about Woolworths. If you do disagree with me about Woolworths, if you think this company is going to grow at a great rate of 3% per year, I'd love to hear your thoughts, because I can be mistaken. I will make mistakes, have always making mistakes, and I could be mistaken by a Woolworths. And tell me about it. I can change my opinion if you bring up a really good argument. And I am willing, I'm open-minded, and I will change my opinion from time to time on companies. And Woolworths could be it. So leave your argument, leave your thesis, I suppose, in the comment section of this video. And that leads us to the end of this video. If you have any thoughts, any questions about any companies, commodities, indices that I've mentioned in this video, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.